What's going on, everybody? This is Lucci here with another episode of Wall Street Porn. Now, I do these videos to showcase some of the big money that can be made in the markets. Today's stock is Priceline. Now, the money that you could have made in the past 2 days was absolutely ridiculous. And let's go ahead and get into this right now. So down here, we're looking at a 6-month chart of the price action in Priceline. As you can see, this stock is very volatile. In 6 trading days, he can rally or sell off 100 freaking points. So you know he's capable of quite a bit. Now, the recent consolidation here between, around 480, 490 to 470 and change, this has been the area of interest for me. I'm trying to figure out where the break is going to happen and where this big move is going to happen. So now let's move in on a 10-day time frame. So on the 10-day, the high end of this range was about 487, and the low end it was, around 475, 474. He tried to do it here. I actually bought a little bit long here, assuming that this move was going to happen, and I was wrong on that position. I tend to make a lot of feeler trades with very small size, just to figure out where that break is going to happen. It happened again down here, where I assumed that the move was actually going to be lower. Amazon as well was pushing significantly lower, and both these stocks managed to put in this snapback rally when the market was fairly weak. The market was fairly weak this day, and all of a sudden Priceline rallied 12 points out of nowhere. This is your heads up. This is your reason for assuming that this break is going to happen fairly soon, and you're going to get that big move. You have to anticipate. It's about anticipation. It's about watching for weird price action, something unusual that hasn't been going on for the past couple of days. And this only comes with you watching that stock intently consecutively each trading day. So now I saw this 12-point move. The monster entry would have been here. The monster entry would have been the day before the gap up. When the gap up happened, I kind of knew in my head, like, okay, this is going to happen today. And I started piecing in about 488, 490. And before you know it, my stock was at about $500. Next day, we're looking at $520. That is a 40-point rally. Absolutely ridiculous. Let's take a look at the option. Here is the option on the 500 weekly call. Now remember, it's January 18th right now. This particular call expires on January 21st. I bought in on Tuesday, and I bought in right off the open. Again, if you have a feeling or you're trying to anticipate things, you don't really have that much time to pick up a weekly option because these things move very quickly. So right off the open, I was buying 150, 160, 170. And then, I was able to hold for the majority of the day. I sold it about $5 and $6, and I held some until the next day and was able to sell at about $7 and $8. Ridiculous, ridiculous sums of money here. Now, all the other call options were great trades as well. The 510 call, the 505 call, the 515 call, all that kind of stuff. So all of these had a lot of potential. The point was to anticipate that move and then make sure you're in for a majority of it. If you get a stock like Priceline, you take a look back down here in this chart, it's, when he breaks out these big consolidations, or when he breaks out of these consolidations, or when he makes some kind of a trend change, it's not just going to be a one-day thing. It might be a one-day, 2-day, it might be a 3-day thing, and this is Priceline. Remember what he's capable of. You always got to remember or know what your stock is capable of. This stock is capable of a 100-point rally. 40 points is really nothing for this thing. So holding on for a bigger move here was the goal, and let's talk about the money. Okay, so right over here we have our trusty notepad. If you had 100 contracts at my price, which was $1.70, that means you expended $17,000. Now, let's go back over here on this chart. Let's assume that you got a majority of the move and you sold at, let's ballpark it at $16. 100 contracts at $16. Well, that equals $160,000, which means your profit is 160K minus 17K, which leaves you with $143,000. So now, was the 100 contracts doable? Yes, absolutely. I say you could have gotten maybe about 200, 250 contracts max. That would have given you a profit of, well over $200,000. But ladies and gentlemen, this is Wall Street porn. This is the definition. This is why I do these videos. And this is what I'm after. This is what is going to get me to my $10 million goal. I made $30,000 off this. I made a measly $30,000 off this, and I should have made $140. But don't let my failures upset you. You guys can do better. You guys can learn from my mistakes and make this kind of money. Thanks everybody for tuning in to this episode of Wall Street Porn. Make sure you catch the next one at sayinglucci.com.